Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, January 27th, 2013, a little after 4 o'clock. And we're doing our weekly review. And we're going to take a look at the action on Friday in the S&P 500. Before I get started, I want to thank you for being with me. My website is a small venture, but guys, I got enough subscribers to make this totally and thoroughly worthwhile, and I just want to thank you for that. I really do. And if you are not a subscriber and you want to see these videos on Monday, Tuesday, Wednesday, and Thursday, with Monday's video being released to you on Monday, Tuesday's being released on Tuesday. In other words, Monday through Thursday would be released in a timely fashion to you. That's what subscribers get. If you're not a subscriber, then I release everything over the weekend for the previous week. That does two things. A, it gives you the ability to see if this type of analysis works, and it helps keep me uh, somewhat honest because I'm not going to go change those videos. So you go look at them and you go, well, wow, Jim sure made a screwed up call on Tuesday. Forget that. But if you look at it and you say, wow, I wish I'd known on Tuesday what what we were seeing in the charts, you can do that. And it costs a grand total of $19.95 a month. Hey, before I bore you with my sales pitch, let me remind you that the website and this video are for educational purposes only, and that nothing stated in the site or in the video is intended to be used as investment advice. Look, I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. So let's take a look. Have you ever heard somebody say the only thing that's certain in the markets is uncertainty? Okay? Sometimes there are these little sayings that, that, that people use that just kind of, I guess they try to teach a little lesson or something. Well, I've got one. It's not, even though I agree with there's nothing certain in the markets except for uncertainty, and I mean that in the sense that something's going to eventually surprise you. I want to say this. Last week was really interesting for the fact that it was really not very interesting. Um, we came in the weekly review is starting right now. 3, 2, 1 weekly review. Um, we had a 4-day trading week because of the Martin Luther King Jr. holiday on Monday. So we traded from Monday through, uh, Tuesday through Friday. And really the whole week as we were coming into this, we were looking at a channel that this is the support line, and my feeling is still the same. Until this channel breaks, why mess with it? How long has this red channel been working? Well, it's been working now for a little bit more than 3 weeks. Here it is. It's been working ever since the first, put it this way, it's been working all year. It's been working all of 2013. Until this line breaks, why do anything different? You might say to yourself, yeah, but we're at 1502 now, and this line is down at about 1487. I could lose 15 points. Well, yeah, you could. So if you're concerned about that, maybe sell and then wait for another touchdown here. But I'm not really looking at that time frame for me personally. So I say as long as this works, hang with it. What's kind of interesting here though, so there's your weekly review. We came into the week looking for this line to be our trigger point for some decisions, and it never got hit. Now, we also about midweek, because we couldn't make this call on the 18th, but about midweek we started to see this little channel right here that's inside this red channel. And this little channel um, did break on Thursday. Friday, it back tested. So that tells me we may be looking now for a down day. But guys, the way this market is plowing ahead, it wouldn't surprise me if we didn't do that. Now, I want to share something with you that's not a chart item, but is a something that I still think is important to take a look at. Alrighty, this is just a screenshot here of the New York Times Online Edition Business Day. As worries ebb, small investors propel markets. That's all. I'm not going to read the piece here, but that is a headline that I think we need to pay attention to, because as worries ebb, folks, bull markets climb a wall of worry. What happens when the worry goes away? Small investors start to propel the markets. So why am I showing you this? I'm showing that to you because there have been a number of times in the past year and a half, I want to say maybe. Let's take a look at the chart. Back here in spring of 2012, it was looking really dicey as we made this head and shoulders top. But the S&P recovered. Then we made another head and shoulders top, came down. By the way, both of these met their targets. This one maybe missed by 0.2%, but just the same, we made a top. We had a sell-off, made a top, had a sell-off. Each of these times, I would see these tops. And even back here in 2011, we made an even larger head and shoulders top. But each time we made these, and people were saying, and at times myself included, saying, this is it. This market's rolling over. We're going back down, going down in a big way. But there's been one thing that has been continually missing from these, quote, opportunities to have a market top. And that is the psychology of a market top. What is the psychology of a legitimate market top? Well, it's typically when the small investor, the Joe Retail, and everybody and their brother once again sees that the markets are a good place to be and it's now safe to buy. So now I ask you, as we look again at our red channel that developed after this gap up, now I ask you, why is that a bad thing? Well, I don't want to insult your intelligence because many of you people are savvy investors, and heck, if you weren't savvy, why would you? Why, you know, that explains why you'd be here. If you weren't savvy, you wouldn't even be listening to this, I don't think. But I just want to repeat this for those who haven't put it in these terms yet. The reason it is frightening when everybody thinks it's not scary is because the markets go up as they absorb investment dollars. Plain and simple. It takes money to inflate the markets. It takes inflows to push prices higher. It takes an imbalance of buying overcoming selling to move the markets up. Okay, now, there's a finite amount of dollars that can be put into the markets. At some point, that theoretical limit, which nobody really knows what it is, I don't think, but at some point you reach a saturation point. The markets, being like a sponge, have soaked up everything they can soak up. And now what happens? By absolute necessity, the markets start to sell. And sadly, those who put in all that money, those last few drops, those last few retail dollars to get thrown into the markets because it's, quote, safe to do so now. those are the people who sadly usually create the first panic leg down. Um, well, I take it back. The saddest case are the ones who get out at the next bottom. But you know what I'm saying? You have an orderly progression in a bull market, then you have a top, and we haven't topped yet, but we will at some point. You have a top, and then you start to have a selling pressure overcomes buying pressure, and the next thing you know, you are into a bear market correction, call it whatever you want to. And let me show you a chart real quick. Looking at a monthly chart of the S&P. Wow, what a run. It's too bad I wasn't that gainfully employed in the late 70s and the early 80s. I didn't start making decent money until the early 90s. But anyway, that aside, look at how this run played out for more than 20 years. 20 almost 22 years actually. If we look at, we could go back to 74, but I want to say look at about 78 to 2000, 22 years, nothing but up. But that was all this money being absorbed into the markets. Now, one of the things that I think happened at this point is you had new investors. You had a lot of people who in the 80s and 90s started to become members of the investment class. It became more popular. People saw, hey, the stock market does nothing but go up. You had a lot of people push this leg up. And I want you to look starting in 95 through 2000. Look at how accelerated that leg became. Okay? Then we broke trend. And the markets have now spent the last 13 years not really being able to get over that mid 1500 level. And each time it gets up there, the first time it sold off, got up there again, sold off. Coming up close now. Are we going to sell off? Well, you figure it out. If we have a top pattern up there, I would say, yeah, we sell off. But all I want to show you is this is like a big breath, and then this is an exhale. Breathing in, exhaling, breathing in, and now what's going to happen next? I suspect the markets will have to come back for some kind of correction. And when we get there, I'll probably have a lot more to say about the long-term pattern here. But the reason I brought this chart up is I just want to show you that this is soaking up, ringing out, soaking up, ringing out, soaking up. Now, are we going to ring out when we get to that same saturation point? Let's see. The other thing that I think is kind of interesting is the fact that we have a series of channels within channels. I've already showed you this little orange channel here, which broke this week, back tested on Friday. If we go back to a 30-minute chart, then we have an easy view at this red channel that formed after our first day of the year gap up. If we then back up to let me see, hourly, we have a larger channel between these two turquoise lines. Okay, so it's really interesting that we've kind of moved up into the very top of this larger turquoise channel. We're actually maybe even slightly above this channel. Okay, there we go. If I move that there, you can see we are now slightly above this channel. But I want to remind you what you should already know. If we take out this top line here on this rising channel by even a decent degree, let's say this next week we get up to 1522, and you say, wow, now we're going to come down to this, what's going to happen? You can't count on this line to catch the market. You can't count on this line if it gets taken out significantly to the upside cannot count on this to hold the market on any selling pressure at all. As a matter of fact, it'll probably be pretty porous. And I just want to reiterate that time and time again. A rising resistance line, once taken out, does not have the same propensity to turn into support as a lower resistance line. What happens is if you're in a downward channel and you take out the upper resistance line that is descending, you're signifying a change of trend. We're already in an uptrend. If we take this top line out, then that probably could even be viewed as a signal that this is now a climactic event. Too many buyers, and it will get back into the channel and uh, face the likely prospect of taking out the bottom line. I can name a famous stock that has done that. Apple, ring a bell? Apple twice got up above its long-term channel, and now it is in some pretty serious trouble. So, guys, I think that probably says it for the weekly review and for what took place on Friday. Again, we simply had a day where we started out with a rally to back test this line right here. We ended up making a nice close. The first close, let me make sure I'm saying that right. Yep, first close over 1500 in a long time. And that's going to pull in retail investors. You just watch it. So, guys, be careful. For now, I'm just watching this line down here again. I'm going to let the crazies, excuse me, I shouldn't say that. I'm going to let the retail investors do what they're going to do, and chances are that they will make the same mistakes they've made in decades and centuries past. And it will reveal itself in some manner in the stock chart. And we should be able to pick up on the signs once we actually are at a topping level. I don't think we're there yet, but it would not surprise me if we get there in 2013 or early 2014. So, guys, hey, thanks for watching, and thank you for your support.